Hey everyone, welcome back to Corporate Decoded, the place where we break down complex financial reports, and I have a doozy for you today. We are diving into the Mesabi Trust quarterly filing, and let me tell you, it reads like a legal drama mixed with a financial thriller. Alright, so Mesabi Trust, they filed these reports to tell us what's going on with their money and how their main business is doing. They are basically a royalty trust. This means they own rights to receive money from mining operations. Their main gig is collecting royalties from the North Shore Mining Company, which is owned by Cleveland Cliffs Incorporated. This particular filing is a 10Q, a quarterly report. It gives us a snapshot of their financial health for the 3 and 9 months ending the 31st of October 2025. Before we jump into the numbers, let's set the stage. Mesabi Trust is all about iron ore. Their income comes from royalties paid by North Shore Mining Company on iron ore mined and shipped. This income can swing wildly depending on iron ore prices, production levels, and the decisions made by Cleveland Cliffs. Now let's get to the heart of it, the financial statements. They show us how much money is coming in and going out. For the 3 months ending the 31st of October 2025, their total revenues were $3,590,450. That might sound like a lot, but compare that to the same period last year, the 31st of October 2024, when they brought in a staggering $79,001,840. That is a massive drop. What made the previous year so huge? A one-time arbitration award of over $71 million from a dispute with North Shore and Cliffs about underpaid royalties. Without that big payout, their revenue in 2025 looks much smaller. This huge difference in revenue directly impacts their net income. For the 3 months ending the 31st of October 2025, their net income was $2,767,463. That sounds healthy, right? Now look at the 31st of October 2024. Their net income was $78,325,525. Again, that massive arbitration award skewed the numbers. Looking at the 9-month period ending the 31st of October 2025, their total revenue was $13,931,747. And for the same period in 2024, it was a whopping $91,740,022. The difference is almost entirely due to that arbitration award. Their expenses for the 3 months ending the 31st of October 2025 were $822,987, which is up from $676,315 in the same period last year. This increase is mainly due to higher legal fees, which makes sense given the ongoing arbitration and other legal matters. For the 9-month period, expenses decreased from $4,535,119 in 2024 to $2,789,193 in 2025. This decrease in expenses is attributed to lower legal fees in 2025 compared to 2024, when they were actively involved in arbitration. Now let's look at their balance sheet. This tells us what they own and what they owe. As of the 31st of October 2025, they had $23,191,923 in cash and cash equivalents. This is a significant drop from $100,204,531 as of the 31st of January 2025. That big decrease in cash is partly because they paid out a large distribution to unit holders. Speaking of distributions, as of the 31st October 2025, they had $4,460,803 in distributions payable. This is what they owe to their unit holders, but have not yet paid out. Last year at this time, that number was much higher at $78,064,060. Their unallocated reserve, a kind of safety net for the trust, decreased from $95,324,736 in October 2024 to $21,087,860 in October 2025. This significant decrease is due to the distribution of the arbitration award money and lower royalties received. The statement of cash flows shows actual cash movements. For the 9 months ending the 31st of October 2025, their net cash from operating activities was $9,973,060. For the same period in 2024, it was a much larger $84,524,911. Again, the arbitration award received in 2024 explains most of this difference. In financing activities, they paid out a huge $86,985,668 in distributions to unit holders in the 9 months, ending the 31st of October 2025. This is compared to $12,595,210 in the same period in 2024. This massive distribution in 2025 was directly related to the proceeds from the arbitration award. Let's dig a bit deeper into the royalty income itself. For the 3 months ending the 31st of October 2025, royalty income was $3,390,609. In 2024, for the same period, it was $7,348,366. The biggest chunk of this is base overriding royalties, and they dropped from over $4 million in 2024 to about $2.2 million in 2025. This is due to lower pricing and fewer shipments. Bonus royalties also saw a big drop from over $3 million in 2024 to just over $900,000 in 2025. This is because the iron ore prices did not exceed the bonus threshold as much in 2025. For the 9 months ending the 31st of October 2025, royalty income was $13,156,985. In 2024, it was $19,613,693. Again, a significant decrease driven by lower prices and production. Base overriding royalties for the 9 months decreased by over $3 million. Bonus royalties also fell by more than $3.3 million. Now about that arbitration award, in September 2024, Mesabi Trust received a final award of around $71 million, including interest from North Shore and Cliffs for underpaid royalties covering 2020 through early 2022. This was a huge one-time event that significantly boosted their finances in the prior period. Look at their contract asset. As of the 31st of October 2025, it was $1,055,605. This represents additional revenue earned, but not yet received, especially related to escalating royalty rates. It is not available for distribution to unitholders until it is actually received. Things are not exactly calm though. On the 26th of September 2025, Mesabi Trust initiated a new arbitration against North Shore and Cliffs. This time they are seeking damages and declaratory relief related to North Shore idling its operations for over a year from May 2022 to April 2023, and also for alleged underpayment of royalties on intercompany shipments from 2023 up to the present. This indicates ongoing tensions and potential disputes with the mining operator. Even with these issues, they did receive royalty payments. On the 30th of October 2025, they got about $4 million for the quarter ending September 2025. This includes base royalties and bonus royalties. The amount is lower than the previous year due to lower shipments and prices. There is also some interesting news outside the pure financials. Cleveland Cliffs announced a successful trial replacing aluminum with steel in automotive manufacturing. This could be a positive sign for future steel demand, which indirectly affects iron ore demand. And in a significant corporate move, Cleveland Cliffs announced plans for a large public offering of common shares aiming to raise over $964 million. This is to pay down debt and for general corporate purposes. This indicates strategic financial maneuvering by the parent company. However, there are also some significant legal battles brewing. A project by North Shore at the Milipos 7 tailings basin is facing legal challenges. The Minnesota Court of Appeals reversed an initial decision and remanded the case for further review on whether an environmental impact statement is needed. A lawsuit was filed by Water Legacy seeking to enjoin approvals and construction until environmental review is complete. The case is ongoing and a trial is set for September 2027. This could potentially impact future operations. A key risk factor they highlight is the potential for reduced bonus royalties. If Cliffs sells less iron ore to third parties at high prices, the trust could see its bonus royalty payments significantly decrease or even disappear. This is a substantial risk given that bonus royalties have historically been a consistent source of income. So what does all this mean for Mesabi Trust? On the one hand, they received a massive payout from an arbitration award, which boosted their cash reserves and allowed for a large distribution to unitholders in 2025. This shows the value of their royalty agreements when enforced. On the other hand, their core royalty income from ongoing operations has decreased significantly. This is due to lower iron ore prices and shipments, partly because of an extended maintenance shutdown at North Shore. On top of that, there is a new arbitration case underway concerning past underpayments and future royalties. The ongoing environmental litigation also adds uncertainty to future operations. The company's financial health is heavily tied to Cleveland Cliffs' operational decisions and iron ore market dynamics. The reduction in their unallocated reserve and the ongoing legal battles suggest a period of financial tightening and heightened risk. While the trust is not a business itself, it is directly impacted by the success or failure of the mining operations it receives royalties from. The significant drop in cash and operating revenue in the current period compared to the previous year highlights the volatility inherent in this income stream, especially when large one-time events are removed from the equation. Alright, that is our breakdown of Mesabi Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the new arbitration will be as successful as the last one? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord for exclusive content and community discussions. Thanks for watching. See you next time.